Here we go. Stocks by the numbers. Welcome back. Celsius Holdings Incorporated, ticker symbol CELH, listed here on the NASDAQ. Energy drink company. We looked at it back here June 25th. I said, in my opinion, the stock went up so much over the years, and we were just looking at some of the overextended fundamentals. We were looking at the stock trading 10, 12 times annual revenue. We saw a PE north of 60. And I said, in my opinion, that even though a lot of the, operating margin, gross margin percentage numbers were climbing and they were heading in the right direction, I said that, in my opinion, the stock was on a tear essentially since 2020 coming out of the lockdowns. The company was annihilating earnings estimates, and we took it to the absolute moon, and the returns skyrocketed. And I said, in my opinion, that if they want to bring it down to earth and bring it back down to reality, it went up like an escalator and the stocks could go down like elevators. And that's literally what you saw. So we did an update here, again, June 25th. Stock was at about 56 and change. I was saying at the time, I said, if we see a short-term pullback to around like 52-ish, and then the stock has a little bit of a bounce, it would make sense to me. We looked at the stock on June 25th, June 26th, top left of the screen. OHLC, the open, the high, the low, the close. Low, 52.26. Then a bounce. Then we pull back again. July 9th, top left of the screen. Low, 52.15. Then we bounced and we tried to get back above the 20-day moving average. But you can see the trend is obviously down because, again, in my eyes, I just think they overextended it, so they had to bring it back down to reality. You saw multiple rejections here, 2, 3, 4 times off of the 20-day moving average here. This is a one-year chart, by the way. And you can see the multiple rejections off of the 20-day, bringing the stock all the way down. 28.20, hitting new 52-week lows. Then it seemed like that's when everybody wanted to strike. People saw that the stock dropped essentially, 50% obviously from these levels, but also we were looking at almost $100 stock that was now down here at 32, 28. So people were kind of salivating because they remember the growth that the stock went through, the growth that the revenue was going through over the last couple of years. So now they were essentially looking at it as they're buying, an absolute rager for like 30% of the cost that it used to be. So this is when I believe it started trending online a little bit. A lot of traders jumped in. They saw that the RSI was oversold. Sub 30, of course, is usually the benchmark. And you can see that we bounced the stock basically back to this fib right here, 35.83. And then we slowly started to pull back to this fib right here. You can see maybe about 30 and a half. Then we have a slight bounce. Today you can see the stock essentially flat, 31.66 on the close. So let's reevaluate the situation and see how we look now. First of all, of course, your boy's a beast because I said this would happen. I was even saying if we drop down into the 40s, that would be realistic. You can't be looking for blood. You can't be too upset with something like that. And of course, the stock went on a massive drop. And it's funny because we originally looked at the moving average, I believe. Hold on, let me pull it up in the old video. Because, of course, because the numbers were so high, I basically said that, in my opinion, if it goes through a big sell-off, again, it's justified. You can't get upset. But I'm going to try to find it here. Bear with me. Bear with me. Yeah, so going back to June 26th, or 25th, whenever we did the video. But at that time, if you look at the weekly on stock charts, the 200-day moving average, which was climbing up with the stock, right? So it looked like that, 34.68 at the time. And you can see that the stock, of course, dropped a little lower, but you can see how it hung out between 32 and 36. And then we had the next leg down, and then we pop essentially right back up to that level. And you can see how it hung out between about 32 and 30 and the high 35s. And then we recently dropped down again to this fib, and now we're kind of sitting flat. So this is why, again, people may say they don't always agree with the way I look at it. And of course, that's fine, because we're all different. So we're all going to see something different. We're all going to like using different indicators that may show us a clearer path when you use the VWAP as opposed to looking at the RSI. I completely understand that. But this is why, again, I always say that in my opinion, especially if you're talking about buying shares for your portfolio and holding them for the longer term, if we're talking about actually investing into shares, this is why I still say, in my opinion, fundamentals trump all. But that's just me. That is just me. But it usually does work out more times than not. You can also see, though, the 20-day moving average, right? We were up here, and then, of course, we started dropping with the stock. We have multiple rejections. Now look at it. Essentially flat right here at just below this fib level of about 31.80 and change, fib level 31.93. Stock hit 32.29 and then had a slight rejection. Now, this could be viewed as kind of a change of momentum, and we couldn't start to see this kind of rebound taking place. And even if we curl back here, you're looking at about 42 and a half. But of course, if we come back up here to this level, you're looking at about the low 52s again. And in my opinion, I think it does do that. The biggest concern that I have is this next earnings coming up. Because, of course, we spoke last time about the Pepsi. I forgot exactly what they did, but I don't know. They were like rehashing their inventory, and they said they were going to cut, I believe, like $100 million worth of orders from Celsius or something. And last quarter, the company posted over $400 million in revenue on estimates of $391 million, and they beat on the EPS side as well, posting 28 cents a share, estimates 23.2 cents. So another nice beat for the company. The stock continued to drop, pull back down to earth, because they took the spotlight off of it. They wanted to make it seem like the Pepsi news was kind of, how can I put this? The Pepsi news was overweighted compared to the potentially already overinflated fundamentals, right? And that's what we were saying when we looked at the stock, that if this thing does drop to sub 50 back into the 40s, you can't be shocked because of how much it ran up. And now, because people saw that Pepsi kind of limited their order, they felt that now the company hit those highs of revenue. The company has plateaued. The spotlight is now taken off of it. It's not as good as we thought it was. We can't continue to grow it like a weed because now we just got hit with a big negative story. So the stock continued to drop back down. In my eyes, that's the way I'm looking at it. But excellent beat there in August. I said, of course, at the time, back in June, I said we have to see how numbers come out. And again, my apologies for not staying on top of it, but you know, when you guys ask for updates and you throw out new symbols to me, I know there's not necessarily a direct order that I follow, but I kind of try to make everyone happy. So you know, you have to bear with me. But someone asked for a CELH update, so here we are. But more importantly is this. Look at this next quarter coming up. Roughly 2 weeks from today, right? It's about the first week of November. Big drop on EPS, expecting a post of only 2.6 cents per share on revenue of 268.7 million. So we'd have to go back. That's about the last time. So almost a year and a half ago, about a year and a third, August quarter last year, estimates were 277 million in change. Company ended up posting 325. So we have to go back about a year and a half from those previous sales to when we were at this 200 million in change estimate, right? But more importantly is this. Right now everyone's hating on the stock, right? They were saying Pepsi supposedly 100 million. Let me see, actually, 1 second. So, wait, so this was the quarter last year. Estimates 351 million, they post 384 million. So let's say, hypothetically, we do the same exact business year over year, minus the 100 million from Pepsi. Now we're talking about 284 million. Estimates 268.7 million. So I will say this, on one hand, I personally would probably give the company the benefit of the doubt, because as some other people mentioned in the comment section as well, shout out to them on the previous Celsius video, they were saying that they're seeing a lot of young people, you know, they're kind of moving away from the traditional caffeinated beverages that most of us older folks grew up with and became accustomed to. A lot of people wake up in the morning, they have to have their tea, they have to have their coffee, nice hot beverage, boom, get started in the day. Now a lot of these younger kids, they're hopping on the bus, they're hopping on the train, they're going to class, they run into the store real quick, they grab an energy drink as opposed to a cup of coffee. So that's why we're seeing just the massive explosion in revenue from these energy drink companies, but also more importantly, the loyalty from the consistent consumers, right? So it seems like the young people are their bread and butter demographic right here. But the one thing I will say is this. I personally would give the company the benefit of the doubt, but if Wall Street sees a revenue miss, again, they're expecting a massive drop in EPS because of the lost business and the lower revenue potentially being projected, right? So I will say this. If I was an analyst on Wall Street and I saw this company and I see these estimates, if I see this company post, let's say, 260 million and they miss that revenue mark, it's going to get destroyed. This stock can easily go from 30 down to 20 because in my eyes, I think that may signal, again, even if it's in the immediate short term, that may signal to the big boys that this is, quote, potentially the beginning of the end. And we may start to see the reverse downhill snowball effect of revenue where all of a sudden, it's much less popular. People are looking for it less often. It really fell off, or who knows, rub people the wrong way. They start moving to different energy drinks. So if all of a sudden we start seeing revenue dip down to 260 million, then next quarter, they miss revenue again, even though they bounce back a little bit. Maybe estimates are like 300 million. They post 280, 290, right? They miss again. Then they're really going to start chunking down the stock. From a technical standpoint, this essentially kind of looks like a big descending wedge. Then you can see the big pop again, getting back above the moving average, which completely flattened out. Looks like you can make the argument for kind of this small descending wedge here over these couple of days. Then we have a little pop out here. But in my opinion, we may continue to trend down coming into earnings. But also because we hit that low, now we have the downward channel with the up pop. Downward channel with the up pop. Right? And then we may run up into earnings because people may say now that the stock is undervalued and really got beaten up. So that's why I would give the company the benefit of the doubt. And in the immediate short term, I'd say over the next month, right? Because earnings are due out in about 2 weeks. So I'd say over the next 3 to 4 weeks, because you always want to give it a little bit of time, I'd say, in my opinion, a retracement back up here to 40 plus will probably happen, as long as these numbers don't miss. That's the way I would lay it out. That's the way I would personally look at this. For the record, I do not have a position in Celsius Holdings. But let's reevaluate the numbers. Because last time we looked at it, stock again was at 56 and change. Now we're down here in the 30s. So the market cap essentially got cut in half. At the time, it was like 13, 14 billion. Now you can see the market cap's at 7.33 billion. PE was 65. Now it's sub 30. EPS, again, we're expecting a big drop here, going from 27, 28 cents a share. My apologies on that. We're going from 27, 28 cents a share, and we drop down to 3 cents a share. So, of course, they want to see maximize profits. So something like this could be viewed as a red flag, but as long as the company reports in line or above, then it should be fine. But I still say, in my eyes, the way I'm looking at this next upcoming earnings is all about the revenue. And we looked at the revenue growth last time, again, basically doubling revenue year over year, 300 million, 650 million, doubling up to 1.3 billion. So the company's growing like an animal. Net margin percentage, again, 17% as of 2023. If we look for 2024, we can see 355, and again, that 400 million mark, which technically is up significantly year over year. But now Q3, again, we can see this time last year 384 million, and now again estimates 268 million. So this is why, with a big drop in estimates, You really have to see the company beat that low ball number. Otherwise, it's going to the 20s again, and it's going to hit even lower lows than 2820 or whatever it was. But going off track here, let's look at the numbers real quick. Really, really quick. Couple of things I noticed. First of all, we spoke about the amazing ability for this company to have cash on hand. And now we can see as of last quarter, we're up to about 900 million cash on hand. Look at the debt, 1.7 million, nothing, right? One little concern, free cash flow, 30.4 million. This time last year, 54.5 million. So in my eyes, that right now is really the one small red flag that I'm noticing. Although we do see the free cash flow kind of pops and drops here with the business, but we have assets heavily outweighing liabilities in both the short and the long term, right? 900 million cash, keep that in mind. If we look at the balance sheet, we see nothing but green, nothing but growth here. And of course, I'm getting a phone call. Yeah, fantastic. Freaking Nielsen calling me about, I don't know, what radio station I'm watching. I have no idea what is going on. But right now, right, just bear with me. My apologies for the unprofessionalism, but you can see the, there we go. There we go. And no message, of course, because it's an ornament. Oh, there it is. There it is. Yeah. Okay. How about I just push a button? How about that? Okay, so we're back in action. So the equity here, you can see about a year and a half ago was at 864 million. Now equity up to 1.25 billion. So that's roughly 50% growth in equity over about the last 18 months, which is phenomenal. And 1.25 billion in equity. The debt, 1.7 million, nothing. And we had 900 million in cash. That brings us to positive about 2.1 billion. Now, if we come back down here and we look at last year's revenue, you can see 1.32 billion for the year on profits of 226 million. We add those up, we're at about 1.5 billion. So now 2.1 billion plus 1.5 billion brings us to about 3.6 billion, in my opinion, quote unquote, fair value for this business. Now, going back to the June levels, you could make the argument that we're overvalued, even if we look at it that way. Because you can say, well, we were trading like over 4x that fair value number. Again, we were like 10, 12 times annual revenue. Market cap was double. PE was 65, right? So that's why, of course, I understand it's all hindsight. But if you really go back and listen to what I was trying to relay in the last update back in June, and now you look at how it kind of transpired over the last couple of months, you would now understand what I'm trying to say to you in a lot of these videos when we look at the valuation of the stocks. And if you notice, they're very few and far between that they really get overextended and don't come back to reality. And it usually turns out to be the stocks that you guys really get trending hard on social media, right? So when I was looking for a pullback on ASTS when it started to run, you know, everyone kept getting it trending, kept piling in, so the stock kept climbing, right? So in that moment, it didn't make sense. Something like Palantir just has too much hype behind it. In my eyes, it shouldn't be anywhere near $45, but keeps climbing, keeps hitting new highs. People on Wall Street Bets love it. People get it trending every day on StockTwits. The traders love it. So again, something like that didn't work out. But you notice, if it's really not trending on Wall Street Bets, and I'm not kind of arguing a viewpoint that's going against like 95% of your way of thinking, then you notice it works out usually 8, 9 out of 10 times. So this is why, again, trending stocks could be dangerous. But point of the story is, going back to everything I said in the last video and now seeing how it transpired over the last couple of months, I'm just hoping that that made sense. And again, nothing is guaranteed, but this is why I say when you look at a situation, you should try to hear a handful of different viewpoints. Who likes it? Who doesn't like it? Who's expecting a slight pullback? Who's expecting a breakup 10% higher? How were previous earnings? What are the analysts saying? What's the news coming out on the business? as we said in previous videos, QuantumScape. What's the time frame for them to ramp up manufacturing and production? Right? We have to look at all of these things, due diligence, before we make a decision. Because remember, chances are you work pretty hard for your money. So to just kind of throw it at the wall and see if it sticks, it's just very dangerous. And we had people in the comments back here saying if it dipped down to 50, they'd go in heavy, and then the stock dropped almost 50% from that level. So, this is why, again, I always say sometimes take a step back, look at the big picture, try to hear what everyone kind of has to say. And sometimes the best action is no action. But again, we live and we learn. But anyway, we just went off on a massive tangent. But in my opinion, we put fair value at about 3.6 billion, market cap right now 7.38 billion. So in my opinion, the stock is trading roughly 2 times fair value, which could be viewed as undervalued. We can easily get that market cap back up to 9-10 billion, no problem. That would bring the PE back up to maybe around the 40s, which really shouldn't be a problem because historically it was trading significantly higher than that. But it comes back to this revenue number here, November 7th. Let's look at some previous news here. Start to wrap this up a little bit, because I'm sure you guys understand the gist of everything I'm saying. Celsius maintained neutral, Lattenberg. Price target cut to 68 from 72. So barely trimmed the price target by about 5-6%. Still maintaining a price target of $68 a share. Celsius maintained hold at Truist. Price target raised from 30 to 35. That's still roughly 10% higher than where we're currently trading. And of course, that's a key fib level that we recently popped up to try to retest. So now that the stock popped up, retested the fib, flattened out the 20-day, and now you can see like we have some pops and drops above and below it, but it's just kind of hanging out. In my opinion, that should signal the reversal, which is why I'm expecting a rise here in the short term going into these earnings. And then if they beat, boom, back here to this level maybe. I would say at least anywhere from 42 to as high as 47, 48, believe it or not. But that is just my opinion. See what I mean? They bring it up so much, and then they show you highlights like this. Oh, it's down over 50% in 6 months. Should you hold it? Should you exit? Exiting, in my opinion, is what they want you to do. But because on this channel, we try to eliminate a lot of the noise, a lot of the nonsense, cut through all the bullshit, and just look at the numbers for the most part, even though I look at charts as well. But if we look at the numbers for the most part, we can kind of see the writing on the wall and where we could potentially pull back to, where we could potentially break up to by ignoring all of the noise as well. Reminds me of Soundhound, not to go off on another tangent, but remember we did an update. There was the article, Jim Cramer said it was a meme stock. Meanwhile, in the chart, we were looking at the tightening of that symmetrical triangle. And I was saying, forget about Cramer. We know that this is a hot trending stock, voice AI, and in my opinion, we're going to pop up, not down. Screw this guy, forget the noise. It's not a meme stock. And what happened? Stock went from, 460, started to run up, right? Broke up, 540 or something. I don't know. We'll do an update, but you understand what I'm saying. Okay, we're moving. There were more price target changes here. Where are we? I can't scroll back any further. Okay. That's interesting. But here we go. Had to go up before down. UBS adjusts Celsius target to 50 from 64. Maintains buy rating. Still very bullish. CICC initiates with a market perform $34 price target. So this company essentially late to the game. Right? I mean, that's the way I call it. They're late to the game. They see a stock that just went from 80, 90 down to 30. So they're just throwing out, a price target right around where the stock was trading. So unfortunately, in my opinion, that's silly. You initiate it with a hold and a flat price target. I mean, did you even look at the company? Or did your boss call you up and say, oh, do you have that report for Celsius? And you said, oh, crap, shit. Where's the stock? 32? 34. Hold. There you go. Like, you know what I'm saying? Like, come on, man. I'm sitting here taking 10, 20 minutes, and I can already relay that the stock, I'm looking for at least 40 plus, 42 to 47, maybe in the shorter term. Like, Come on. I mean, come on. Celsius Holdings maintained buy at Roth. Price target cut to 43 from 45. Okay, so slight dip. Basically, they're thinking, in my opinion, business is kind of going to, remain the same, but, they lost, whatever, 100 million from Pepsi, so it's, could take a slight dip from where it was. Very understandable. Celsius Holdings maintained overweight by Piper Sandler. This was about a month ago. Price target cut from 50 to 47. See what I mean? So everyone's still kind of bullish on it. That's what I mean. They can't deny, in my opinion, the health of the fundamentals, which of course we just laid out on this channel because we're the best. And that's why they can't, you can't really, I don't see how you can give a, like a $25 price target unless you are 90% confident that this is going to be a crappy quarter and the stock's going to drop and hit those new 52-week lows. Obviously, if that happens, you're going to look like a champ. But again, in my opinion, this may be kind of the end of the sell-off here in the short term, and we may start to have kind of this little V rebound here back into the low to mid 40s. I really do believe, personally, that's what's going to happen. But also, the book value per share is up essentially 1,000% over the last 18 months. The problem is, it's only $1.78 on paper. Stock right now trading, of course, around 31.5. So we looked at that last time as well. I think it was trading like 30 or 40 times book value. And I was saying again, that could be viewed as overvalued. So a lot of those numbers might come back to reality. And we can see again, price to the PE ratio was up here in the 60s, in the 50s. Now we're down here in the 30s. That's essentially the lowest it's been. Price to sales, 5 times sales. That's the lowest it's been going back the last 8 quarters. Price to cash flow, sub 28. That's the lowest it's been going back the last 8 quarters. And again, price to book. Look, we were up here close to 50, close to 60. Then we dropped to 32. Now we're at 17 times book. Much more realistic than 88 or 198, wouldn't you say? That's the point I was trying to make back in June. Enterprise value miraculously dropped 60% over the last 2 quarters because, in my eyes, this is kind of a BS fundamental that they put here. Because obviously, again, we just laid out, in my opinion, fair value of the company is $3.6 billion. So you'd probably pay a little bit more than 7.3 in my opinion. But again, this figure basically also follows the current stock price as well. So as the stock begins to trend down and sell off, all of a sudden, a company would pay less, supposedly. So that's why, it's there, and I mention it, but I personally don't put too much weight into that fundamental. Return percentages are all up across the board. We spoke about the gross margin percentage getting above 50, dipping down, getting back above to almost 51. As of last quarter, 51.6. Phenomenal. Operating margin, same thing. We spoke about a high here, 25. Dip, back up to 23. Slightly up again, 23.45. EBITDA, earnings before interest, taxes, depreciation, amortization. Up to 25.6, down, back up to almost 24. Slightly up, 23.7 to 23.8. So technically still trending in the right direction. Profitability we saw took a slight hit, but we went from 21.8% to 19.8%. So that's why if all of the numbers aren't moving up and up consistently, they'll try to make an argument on Wall Street that that's why they pulled the stock back. But in reality, we know the truth. The stock got overextended. It was raging for 3.5, 4 years straight, and it was only a matter of time before they brought it back down to earth, brought it back down to reality. Look at something like the inventory turnover, though, is essentially doubled over this time frame, going from 2.1 to almost 4.5. So that's why these numbers, the growth is there. And the problem is we just had to kind of readjust the company a little bit, and now we may take that next run higher, and for all we know, we may be on the up and up for the next 12, 24 months straight now again. Asset turnover, how much revenue the company's generating off of said assets on its balance sheet. As the assets consistently keep growing, we can see that we did get above 1 and had a dip, and now we're maintaining 0.96. So in my eyes, that seems pretty healthy. We don't get paid a dividend. EPS side has been solid. Again, we're expecting a pullback here, 3 cents a share. And then after that, we're kind of building back up. Same thing with the revenue as well. We're expecting a dip down here to 268 million, and then we're looking for a bump back up 350, almost 390, and then 433 million halfway through 25. So we're still expecting continued growth, and hopefully this kind of 100 million pullout from Pepsi is just a short-term speed bump. And even though the years, you can see, they're still expecting growth. 2023, 1.32 billion. For 2024, almost 1.4. And then look at this, 1.6 billion for 25, 1.86 for 26, over 3 billion for 2027. So they're still expecting to maintain their market share, maintain the popularity. We're trying to kind of sweep the Pepsi news under the rug and just go back to business. So this is why over the longer term, it probably will be good, unless my only main concern right now, again, unfortunately, a lot of these companies I feel tie into elections. And I know you may not agree, but my point is we're seeing a lot of popularity for Trump. And if Trump wins, I know he was kind of talking and hinting at RFK, Robert Kennedy Jr., maybe coming in, and we don't know exactly what he's going to do, because he was very outspoken against the vaccines, and he's been talking about, food additives and preservatives and food dyes and whatnot. He wants to make us healthy again here in the States. So something like Celsius may run into an issue, because we know they pile a lot of crap into these energy drinks. So technically, I mean, I don't know if Trump wins, the stock's going to take a hit. I don't know about all that. But I will say, like, if we find out January, February next year, they put RFK in charge of, like, the FDA or something, and he's going to start going after all of these food and beverage companies, then we may have an issue. Okay? I'm laying that out right now. And we know that these food dyes, these preservatives, these additives are kind of in almost every food, snack, and beverage that's on our shelves. So that's why if they're really going to clean house and U-turn the entire food industry, then honestly, I don't know if any company will be safe. I'm going to say that much right now. So any plays that we're talking about here could be very short-lived, only the next 3 to 6 months maybe. So we're going to have to play that by ear. But in the fundamentals, in my opinion, I like CELH here at these levels. Again, in my opinion, I'm looking for 40 plus here if those earnings beat. We can see trending big downward here, sub mid Bollinger Band, boom, have the pop up, pull back, boom, should have another pop up, right? You understand? And then boom, and then boom, and then boom. That's what I'm personally expecting, this whole whoosh little recovery here. MACD looked like it wanted to potentially cross to the downside. It's sitting here basically flat right now. Stock closed essentially at the mid Bollinger Band almost, 31.79, stock closed 31.66. RSI still middle of the road here, 46, right? So we bottomed out. Nobody wanted it. Big sell-off. Then the traders see it, get a hold of it. Boom, we have a pop-up. Slight consolidation, pullback. Boom, we have a pop-up. You see what I'm saying? Boom, boom. So that may be coming over the next couple of weeks, in my opinion. Definitely still has more room to go with the RSI, that's for sure. And top Bollinger Band 35 and change. We were already there. That shouldn't be an issue. Long term back to 59. Very, very doable. And look here. This is what we were talking about last time. We were saying potential pullback to the moving average. And you can see that it was on the up and up. And now you're seeing a slight curl to a flattening here. Because instead of going up for 4 straight years, the stock has now been going down for the last 5 months or whatever it's been. So now the moving average begins to flatten out. You can see the 50-day was on the up and up here and is now curling to the downside. Our Bollinger Band's dropping down hard. And also because of the big drop, we had the the trumpet of our Bollinger Bands, and you can see it bottomed out, the bottom one, all the way to 15, and is now starting to bounce back up with the stock. So in my opinion, we can potentially even flatten out or just kind of hang out around this moving average here of about 37. That'll help tighten up the Bollinger Bands. That all may happen before earnings, and then boom, you may see a pop back up to 40 and change, in my opinion. Also, you can see on the weekly, the MACD crossed to the downside, completely cratered with the stock, curled, and is now potentially heading back to flattening and crossing. So that's why I think we're in a recovery mode for CELH right now. And personally, again, it could still be viewed as a little risky, but in my opinion, I think it's worth a shot. RSI on the weekly hit that benchmark, started to bounce. We can see it's still down here at 33, so technically could still be viewed as oversold, and that's why we can continue to steadily run going into earnings. But in my opinion, the numbers look pretty healthy. And again, to wrap up, this is going to be the main catalyst, in my opinion. That's the main catalyst. If they come out and they post 290 million and business is fine, they don't even care that Pepsi, shortened their order, limited their order, however you want to put it, then the stock's going to explode. This company turns around all of a sudden, that Pepsi news really hurt their business, and now we're going to see some light revenue, and they post 250 million, stock's going to drop into the 20s, in my opinion. Fair warning. But overall, again, we looked at the numbers, and in my opinion, I like it. I would put, again, I'm looking for, what did we say, 42 to 47, so whatever. We'll go dead center of that. 45, in my opinion. 45, my personal, my personal price target on CELH, which from this level is almost 50%. But I'm sorry the video's coming to you late. I had a rough day today, but I wanted to do it because I know people were asking about it. And that's pretty much it, because I spoke for too long like I do every single day. Okay, so once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comment section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you so much for your time. Have a great weekend.